Good morning and thanks so much for tuning in. You're watching Trade Talk. My name is Alex Matthew. This is BQ Prime and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
All told, if you look at the headline and you take a broad view of things, it's looking like it will be a positive start to trade, but there's a lot of stock-specific information which we will take our viewers through over the course of the next 15 minutes or so. But let's start with that broader view. The handover from the US markets was positive. You have the tech stocks in particular that are marching to new highs. Apple heading towards the $3 trillion valuation once again. And all told, it's positive. Of course, commodities also in focus, oil heading lower. For the Indian equity markets yesterday, Hiral, we were within that range, but we snapped a two-day losing streak.
Absolutely. And clearly, if you go to see, there is optimism, but it's cautious optimism that we're witnessing in the markets overall, right? So clearly, from here on, what happens ahead of the FOMC is something that we need to watch out for. And banking will be in focus from that perspective. Tomorrow, as we know, the FOMC will be announcing, what their decision is.
Day after tomorrow,
I beg your pardon. And with that, you already have China, Alex, which has gone ahead and cut the rates. And this is for the first time in 10 months.
Yeah, the short-term rate, by the way, just a short while back, being cut for the first time since August last year. And that, of course, is in the context of recent announcements by China, spurring banks there to cut rates in order to spur the economy. And clearly, that piece of information is important for the market in trade today as well. China being one of that weak points, that weak link in the global economy, questions about its economic growth over the course of the rest of the year, leading to a decline in prices of several commodities, oil being one of them.
Absolutely. And the metal pack will be in focus as well because of the positive news in terms of China. So watch out for the metal counters in trade. But clearly from a technical perspective, Alex, if you go to see, we have seen Nifty actually consolidating in that zone of around 18,570 to almost 18,620. And 18,555 is where Nifty has been taking support at. So watch out for these levels pretty closely from a Nifty perspective. On a resistance level, 18,637 is the first point that we will be tracking from here on. Moving on to Bank Nifty, as Alex and I were just discussing clearly that these stocks will be in focus ahead of the FOMC. Support is seen at around 43,837 because we've already breached the 44,000 mark on the downside. If we inch further lower, there is going to be much more selling pressure that could be coming in. In terms of the F&O side of it as well, we've seen strong put writing at around 18,600 strike, and the maximum call OI is placed at 18,700. So in terms of the OI that we are seeing on the futures as well, it says that we are seeing some bit of short covering that's coming in, and stocks like Canara Bank and Tata Chemicals are the ones from the F&O that will be going ex-dividend today. So we will be watching out for these two as well from a technical perspective.
I would continue to watch the oil marketing companies were buzzing in trade yesterday.
Absolutely.
And I mentioned at the start, crude oil prices have declined. Brent crude at $72 to the barrel as things stand right now, last I checked this morning. And this is important because it has given up all of the gains that it made in the last few days when you had that surprise announcement after that OPEC meet of Saudi Arabia cutting its production in the month of July. And so we've recouped those gains, or rather we've gone back from those gains and come back to $72. The other pack, of course, to watch out for, Hiral, is the realty pack, because they've been moving from strength to strength.
Absolutely. If you see in terms of the realty players as well, Alex, the way the real estate index has moved itself is giving you indications that, yes, there is that pickup, there is that momentum that's coming in. Now, with the RBI coming in with a pause, the next expectation is probably a cut cycle is on the anvil. And that is what is going to give real estate players momentum from here on. And, to be noted that versus the global peers, we've clearly outperformed, wherein the global real estate index and stocks have seen gains in single digits. We've seen gains in double digits. So that entire pack will continue to remain in focus. And, yesterday, interesting report that we were reading.
Yes, I was just going to mention.
Where houses, Alex, in MMR are actually becoming smaller. Now, something that was, people were buying, which was around 900 plus square feet, has shrunk to almost little over 700 square feet. Whereas the other regions are actually seeing the per square feet expand.
Absolutely. And in fact, this is something of a trend that we've been witnessing in Mumbai. The Tokyo model has been spoken about over the past year, where higher prices at a per square feet level. In order to bring in affordability, you have real estate developers that are launching smaller and smaller houses. That isn't the case in the NCR region, where you've seen a significant increase in the size of houses. So maybe you should write into us and tell us whether you've been experiencing that as well. In the meanwhile, we should also mention wheat, because that as a commodity has been in focus. Of course, yesterday you had a big announcement from the government in terms of the stock limits coming in after a period of 15 years. And that's quite a significant statement from the government to make. And that's because they had found, according to the secretary, that the prices in the very recent past had gone up by as much as 8% at the mandi level.
Absolutely. I think that's not still translated to the retailers. Yeah. So that's an important aspect we need to note. Now, how will it impact stocks is going to be interesting, because we still don't know. I mean, there could be a sentimental impact, Alex, that could be coming in terms of FMCG players, especially the likes of a Britannia, ITC. So let's see how the markets actually view this.
Yeah, certainly. And in fact, commentary from them has been that consumption, we're trying to gauge how consumption will play out in the rest of the year. Of course, that announcement about El Nino and the impact on the spatial distribution of the monsoon will also be very key to watch. The cyclone of the western coast of India and how that will impact the progression of the monsoon is also something that we're watching very closely. And also another stock that has a significant response to rural demand, which is Hero MotoCorp. That's something that we're watching very closely as well, Hiral.
Absolutely. I mean, all these two-wheeler counters, in fact, if you see the May sales data as well, that's clearly indicating that there is traction in the passenger vehicle and the two-wheeler segment. And that clearly tells you that there is some bit of momentum from the consumption space that we are seeing. In fact, Sajid is also joining us. Good morning, Sajid.
Morning.
Sajid, I mean, all of these auto companies, we already had a Tata Motors investor meet, a lot of commentary that came in from there. Now you have a Hero Moto. What is their strategy going to be from here on? Because clearly the focus now again shifts to the rural markets.
That's true. So the purpose of Hero Motors analyst meet is to give the analysts a runway of how the two-wheeler market is looking at. And for the last couple of quarters, we've been hearing about rural slowdown that's coming into the market. So the company is basically now going to focus on young and first-time buyers. They're going to relaunch the Passion Plus, which was the entry-level bike in the segment. Plus, there is a lot of emphasis on retail financing by Hero Moto. Remember, Hero Moto's finance arm does a lot of retail financing, and now their penetration has moved up to 60% of the retail stores which they have there. So and also they're going to bring in new variants on for 125cc bike, which has been the largest selling bike for them. If you look at premiumization, Hero Moto is also looking at expanding that premiumization bikes there. Their X-Tech bike, which now constitutes nearly 25% of the sale. They're going to push a lot of that going forward. They're going to open 500 new exclusive stores under the Hero 2.0 strategy, which is there, and they have now a strategy for Harley. They are the manufacturers for Harley in India for that, so they're going to open over 100 stores and also bring in Harley X400. EV strategy has been they're going to be aggressive on that. Vida EV, they're scaling up to over 100 cities. It's been very slow start for them, and to improve localization, they're going to bring in tier 2 and tier 3 suppliers. If you look at overall EV strategy for them, they have Vida EV and they have 35% stake in Ether, which they're going to push. And if you look at the guidance they're coming in for, they're giving a long-term guidance of 14 to 16% of EBITDA margins, annual capex of 1,000 to 1,100 crores. But that's primarily for premium bikes and EV. And they're planning to build up their accessory business to 8,000 to 10,000 crores from current 5,000 odd crores in the next 3 to 4 years.
Very interesting inputs, particularly on the electrification and the premiumization strategy. I guess in the volume numbers, we'll have to start watching for the mix to see how this premiumization strategy is playing out.
But they're also relooking at the battery swap because they think there's very limited scope there, so they have to relook at the strategy of battery swap, which they've started actually. So.
And if you see in terms of the stock price as well, clearly it's very close to its 52-week high already. already.
It's gone up by
So
12% in the last 1 month. Yeah.
exactly, and all of these auto players, right, are moving in that upward direction. So probably the momentum is here to stay. And if the monsoon is supportive as well, you will see that fill up that comes in from the rural markets as well, Alex.
Certainly, as things stand, we're looking at a normal monsoon. We'll see if that continues to play out. Thanks so much, Sajid, for that. Moving to the stock of the day, arguably, and this is on a negative report on the directors of Zee Entertainment. And we're talking about the SEBI interim report that is barring SL Chairman Subhash Chandra, as well as Zee Managing Director and Chief Executive Officer Puneet Goenka from holding any directorial positions. The allegations are quite significant. They are saying that Subhash Chandra gave a letter of comfort for the loans of Zee associate companies without board approval. And there was also a misappropriation of 200 crore rupees in a fixed deposit that was given by Yes Bank for the benefit of associate companies. There was a circuitous movement of funds within that Zee group that ultimately came from Zee Entertainment for the purposes of repaying of loans by Zee entities.
Right. And with this, with these allegations, what happens to the stock is important, Alex. Because if you see in terms of Zee Entertainment itself, the stock has been an underperformer on a YTD basis, right? Though there were a lot of tailwinds that everyone was looking at with regards to the merger with Sony, but all the kind of, push and pull that's been happening with the company, with the merger, that's going to be an interesting aspect to understand from here on. In fact, Karan Taurani from Elara joins us with more on it. Karan, good morning and welcome to the show.
Hi, good morning.
Karan, let me come to you overall in terms of, the news that has come in so far with SEBI actually barring the promoters, specifically if you look at Puneet Goenka as well as Subhash Chandra. What is the overall implication in terms of the merger, number one, and two, their positions, in terms of the merged entity?
So, firstly, if you see, this will definitely have a big implication in terms of the merger getting delayed. We don't see a probability of the merger getting called off, right? So the merger will, kind of either go through with him or without him. But there's a high likelihood that the merger actually will go through. The second question you asked about, in terms of them being in terms of the merged co, I think that is uncertain as of now in terms of what position they are in. Because clearly, if you look at the order which has been passed by SEBI, it has clearly asked that Mr. Puneet Goenka and Mr. Subhash Chandra should not be a part of the KMP. Now, what Zee has got here in terms of legal recourse is that they will definitely go to SAT and ask for an appeal against this order. But our checks with a lot of the people in the legal industry is indicating that clearly SAT will not do anything which is against SEBI. So what SAT will actually do is that they might, kind of dismiss Zee's plea, which means that, Mr. Puneet Goenka and Mr. Subhash Chandra are not KMP of Zee company currently and even the merged co. Or the other option is, that they will give a stay order against it. Right now, the second scenario comes in wherein they give a stay order against it. There is going to be a huge delay in terms of the merger process. So that is how we see it as in terms of the two probabilities that could emerge because of this. In terms of the appeal file, now I think Zee could file this appeal in the next 24 hours. And SAT will also give its decision in the next 48 to 72 hours. So it is not that, SAT will take time like NCLT and the decision will come after 2 weeks, 3 weeks after multiple hearings. So SAT typically will give a decision within 48 hours after the appeal has been filed by Zee.
Okay. Karan, hi, Alex here. Just about the immediate implication for the stock price, we've already seen a decline of about 20% in the year-to-date period. This is clearly a negative, so you could see a short-term impact, right? What are you looking at in terms of the immediate impact?
So putting everything into perspective, the legal repercussions of it, the immediate impact definitely is negative. You might see, Zee breaching that levels of, 180 share price because what the investors will also factor in here is that there is a mild probability of the merger not even going through because tomorrow, just in case if SAT, grants them some sort of a stay order, and if the stay order is kind of elongated, that could be the only reason, for suing to pull the plug and not go ahead with the merger. Otherwise, the probability is very low of the merger not going through. So immediate impact definitely is negative. Plus, over and above this, there are other overhangs also because I think NCLT hearing which is coming on this Friday, 16th of June. That is going to decide about this merger NCLT. Plus, there is also a hearing which is going to come in wherein NCLAT recently dismissed NCLT's plea of reconsideration of exchanges. So a lot of complication right now as far as legal proceedings are concerned, and this could have a huge overhang because definitely what we were expecting that because of this NCLT getting kind of dismissing NCLT's plea of reassessment, which means the merger process will not be elongated, would have probably gone through by August. But because of these things, because of this new thing which is emerged today, I think the timelines could be far more stretched, and that could be a huge overhang on the stock.
So, Karan, my last question coming to you over here is from a valuation perspective and for an investor, taking the future probability into consideration of the merger and the way the stock has underperformed, it's down almost 20% on a YTD basis. Is this a good time to buy the stock?
I think the only trigger that holds on to the stock is the merger, right? So even if the stock goes to 170, 180, whatever levels in terms of bottoming out, the investor should buy the stock only if he or she is confident of the merger definitely going through, right? Now, what brings to that confidence is that, Sony has been very supportive in the last 1.5 years in this entire legal proceedings. Sony is very much aware of all these events, whatever SEBI has pointed out in terms of, the frauds that the promoter group has committed, all those kind of things. Sony is very much aware. So which is why the confidence is there in, within us that Sony will there's a low likelihood even that Sony will kind of pull the plug. So I think as far as valuations are concerned, with these kind of events happening around Zee, valuations don't matter. So valuations are compelling and will remain compelling. In fact, they can get even more compelling from here on. What matters is how these events actually pan out, right? So I think currently, if you look at Zee, I think they're trading at somewhere close to about 10 to 11 times PE. If you look at the merged co-company, basically, which is there. And I think if the merger were to go through, you could see a potential re-rating of at least 50 to 60% PE because a lot of things will change over there. So just to give you a scenario here that in case the merger goes through without Mr. Puneet and Mr. Subhash, not being as KMT, even then the stock will re-rate because the merger going through. So the merger is a bigger event than what happens to the current management right now.
Fair point. Thank you so much, Karan, for joining in, for giving us that perspective on Zee Entertainment. Clearly, the stock is going to be one to watch out for in trade today, and key developments over the course of this week, culminating in that NCLT hearing at the end of the week. For now, let's take you through some of the other key stocks to watch. Significant development with regard to Inox Wind.
Absolutely. In fact, this week itself, you did see Inox. In fact, last week, you did see Inox Wind win an order as well, on the back of which a smart up move that did come in. And now they've said that Inox Wind Energy will actually merge with parent Inox Wind. And this will be done via a share swap. Now, for every 10 shares of Inox Wind Energy, 158 equity shares of Inox Wind will be issued. And the reason why they are doing this, Alex, is because they are looking at consolidation to simplify and streamline the group's overall structure. Now, the reason why this will be positive for Inox Wind Energy is because the arbitrage, that stands at around 25 to 27%. And that is something which is going to be positive as well. So watch out for these stocks in trade today. Apart from that, you have a Punjab and Sindh Bank, where they've received a board approval for raising funds around 750 odd crores. And this will be done in the period of next 12 months. So watch out for both these names pretty closely. But apart from this, a lot of order wins that are on the annual.
Yeah, and generally you could see some of these stocks have a bit of a pop. We've seen that in the recent past as well. I quickly take you through all of them. SJVN Green Energy has bagged a 200 megawatt wind power project. It's a significant project, and it could come with a cost of as much as 1,400 crore rupees. And this is from Solar Energy Corporation of India. That's one stock to watch out for. HFCL has bagged a contract worth 80.9 crore rupees from the Delhi Metro Rail Corporation. It will set up a fiber optics transmission system for 3 priority corridors of phase 4 of the metro. The order is expected to be executed within 156 weeks. You have Engineers India that has been awarded a project for 472 crore rupees from ONGC. That project is for replacement of CSU off-gas compressors and regeneration gas compressors. This is something that will be completed within a period of 40 months. And finally, this is not an order win. It is JSW Steel being declared as a preferential or preferred bidder for the grant of mining lease for iron ore minerals in 2 blocks in Goa. The projected iron ore resources of 9.77 million metric tons and 65.73 million metric tons, respectively, in those 2 mines.
Right. So a lot of stock-specific action is what we are going to watch out for. But Alex, overall, from a macro perspective, we already spoke about China.
Yeah.
Now you have IIP and CPI that has come in as well.
Absolutely. And in fact, both of those numbers, for CPI, you had it come in slightly below the consensus estimates, and you had IIP that significantly beat the estimates for the month of April. Pallavi is joining in to give you some context and to tell you what's what. Pallavi, over to you.
India's retail inflation came in at a 25-month low. Retail inflation stood at 4.25% in May, compared with 4.7% in April. This is according to official data published on Monday. A panel of 37 economists polled by Bloomberg had estimated a reading of 4.31% for May. Food and beverage inflation stood at 3.3%, down from 4.2% in April, but some items such as vegetables, pulses, meat, eggs and milk did show a sequential rise in prices. Core inflation, that excludes food and fuel, fell a little bit to 5.1% in May, compared with 5.3% in April. That's according to Bloomberg data. So while consumer inflation remains within the central bank's target range, it's still above the target of 4%, as noted by the Monetary Policy Committee last week. It's expected to see a little bit of a pickup from today's figures going ahead. Meanwhile, industrial output data was also published on Monday. The index of industrial production expanded 4.2% in April, compared with a revised growth of 1.7% in March. While this too was better than expected, on a month-on-month basis, the index saw a sequential decline of 7.4%. Stay tuned.
And so clearly, the macro data from India, the macro data from China is giving us an indication of a positive start, Alex. SGX Nifty, which is inching higher, 18,700 is what we are staring at as well. So which sectors are actually going to take the markets higher is something we will wait and watch over the next 15 minutes once the markets open. That's a wrap from our side, from Alex and me. Thank you. Goodbye. Lots more lined up on BQ Prime. Please stay tuned.